Welcome back to the channel. As always, if you are copy trading, you are an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to look today at Triple B Foods, ticker TBBB. And this is a stock that is relatively new, as you'll be able to see from the chart. The history really doesn't go prior March, actually February 2024. And one of the things we can see right away is that since its listing, the company has been in a pretty decent upward move. So what do these guys do? Essentially, they are a hard discount retailer. So they operate a chain of grocery retail stores in Mexico. So the typical, think of Mexican Aldi kind of shop. So cleaning products, hygiene products, cosmetics, um, desserts, jellies, foods, drinks. So again, think of that type of business model. And they provide branded and private label products, which is something that we'll be talking about later. Their kind of consumer is the middle income households through online channels. And like we said, they're operating Mexico primarily. So what we see at the moment is that the company is trading just under 30, having reached the 33 level earlier in September. And I do think that there is headroom for the stock to come back to 35 and potentially down the line, say in early 2025, the $40 mark. So at the moment, the valuation is rather onerous, as you can see here. It's almost 200 times price to earnings. However, the reason for that is because the company is still growing. And if we have a look here, right, the earnings at present are rather small. So 20 cents for 2024, set to double in 2025. So obviously that is a big earnings growth. And you can expect from this type of company that is relatively young and rolling out a lot of stores to grow significantly that bottom line to a much substantial level. So because of that, in terms of valuation, the kind of metric I'll be using here is the price to sales, which at the moment is about 1 time. When we look at some of the competitors, this is something that we can see here. So let's change the next 12-month PE for price to sales. Price to, there we go, price to sales. And some of the competitors, who are they? So we're looking at companies like Maplebear. We're looking at Kroger. We're looking at General Stores, Grocery Outlook, and we're looking at Albertsons. So what we see here right away is that in terms of valuation price to sales, it's definitely not at the bottom of the list, but it can certainly go a lot higher, right? So picture a scenario where the current price of 30 triples to be in tandem with that. That's not the scenario I'm picturing here. As a matter of fact, my expectations for the stock are a little more conservative. So we're looking at an increase of 30% sales, right, for 2025. And we simply take that existing price of 30 and increase that 30%. That enables, that allows us to get to a price target of 40. So initially, the price target one that I will be looking at is 35, potentially arriving at say 40 down the line, but that will take a while. And the reason for that is because, like I said before, this is a relatively new listing. So the company seems to be recognized by the market. That's why they have such a high multiple. But for 2025, it's a new phase of growth for them, and the peg two at the moment for that is around yeah, almost 0.40. So that to me signals that there is headroom, but the market hasn't really gotten too excited about the stock, and that's why it may take a little while. But in terms of the projections, yeah, the stock has the highest revenue growth and earnings growth in the sector. And the volatility as well is about 50%, which is the highest in the sector. So this is, the kind of move that we can capitalize on to make a significant upside. Also, they're reporting on the 21st of November, which is rather late in the earnings season. And if there are other peers reporting ahead of them with positive results, that could get the stock going in anticipation of the earnings growth. So we could see some kind of uptick before that earnings date already. Now, in terms of sector tailwinds, we could have a look at trading economics. One of the things about the US consumer is that whilst the strength of the US consumer seems to have bottomed and seems to be on an upward trend, right? Moving moving higher on a monthly basis. The Mexico consumer confidence is actually at an all-time high. So in terms of um, the strength of the consumer in Mexico, it seems to be in a much better place right now than the US consumer. So as a sector, I think this is an area that is going to be doing better perhaps in the near term in Mexico as opposed to the United States. And that's one of the reasons why I'm considering exposure to this company. So back to the business model. These guys have small format stores. They have limited number of items that they sell at any given time. So we're looking at about 800 items with high rotation products. And they have emphasis on private label products, which in 2023 was about 47% of sales. And management has expressed their intention to increase that. So they put Aldi as an example, and we can look at that in the transcripts. So let's have it. Yeah. So yeah, so they're putting Aldi as a reference where the private label penetration is about 90%. These guys are halfway there, but they have expressed in other comments that that's an area that they want to keep increasing, right? So when you look at the headroom as to uh, how high can it go, it is probable to infer that they're thinking about a similar kind of situation. And why is that good for them? Well, the ability to have these private label products provides them with better margins, uh, provides them with control over the supply chain, provides them with purchasing power, and a number of other benefits that elevate the business. So at the moment, they're scaling the benefits of supplier relationships, the increasing brand recognition, and their value proposition is being more and more recognized by the consumer. Also, very, very important point for them was that in Q2 2024, I think it was, they released a very interesting chart. not here. Okay, yeah, here in 2023. Very, very interesting chart about the vintage. So this chart represents the vintage of the stores, and it provides an idea as to the sales per the store vintage. And look at the cutoff here for 2022. So it shows that the stores are getting up to speed quicker with every vintage that they do. So in other words, as they are rolling out more stores, and they are rolling out more stores, each one of these stores is generating more and more sales quicker, which is definitely a good place to be. It provides us with quicker growth. And that's exactly the kind of tailwinds that we want to have. So think about all that traction, right? And think about how that impacts their brand recognition, how it's going to help them negotiate larger and better deals with their suppliers. One of the commentary in the last quarter from management is that as we get bigger and we work closer with our suppliers, whether they're private label suppliers or branded goods suppliers, we are getting better terms. So that signals that likely more profitability coming their way, the ability to, provide better products and better service to the customers and capturing that market share. Now, in terms of risks, of course, like with any investment, there's going to be any risks. And if you have paid attention recently to the Mexican peso, it has not been doing very well. Now, there may be some reasons for that. The PMIs in the Mexican economy have been a bit weak lately. But of course, we have had a period where the US has been performing quite well, and interest rates for the United States have stayed elevated. So we have had this downward movement on the Mexican peso since late May, right? And it is early to say yet if that's bottomed out, but I think that this move may be coming to an end in the near term. So that's something I'll be monitoring to time the entry into the trade. Of course, there could be other risks to the strategy. One, of course, is how effective they are with the store rollout execution. So, for example, in the last quarter, Q2 2024, they opened 121 stores. And remember that the geographical territory for this company is Mexico only. So they continue to roll out more stores. 121 last quarter, 94 the previous quarter, 153 the quarter prior, and that counts for more than 2,500 stores as of today. That's rapid expansion, and with rapid expansion comes execution risk. That is something that we could see down the line with these guys if any of these stores or a number of the stores don't perform as good as expected. Of course, they have competitive pressures, and political instability could always be something to look out in countries like Mexico. In terms of the board, they seem to be quite established on what they do. So the current board is formed by the founder, CEO. He's been with the company for a long, long time. And also the CFO has been around for quite a while. So it seems a rather solid and well-established team at the moment. Coming back to company itself, who else could be looking at the stock? Well, it turns out that there are a bunch of hedge funds and professional investors out there with exposure to this stock. So we got a bunch of investment managers here, not your really large, slow money players, but more of the aggressive, explosive upside players that we probably want to be replicating, right, in terms of capturing that upside. So that signals to us that this is the right kind of play for us to look for upside. A few more comments that I'd like to um, touch on, and this chart here is again one of the main drivers for us. So I would expect that sort of rollout to continue um, to the expansion rate that we have seen. The management stressed that in the last earnings call that unless that we see a significant change in capex costs due to whatever reason, the tendency is for an improvement on returns because the vintage of source is performing better than previous vintages. So that is essentially telling me that unless there's anything unknown, there shouldn't be a change for that. And to me, that's quite a compelling to see that needle moving forward in terms of driving that earnings growth. And as well, when we look at their KPIs, the average size ticket for the company has been growing favorably. So it went from 50 pesos in 2019 to 82 in 2023. Now, management advised that in 2023 it was increased due to inflation, which is pretty good comment to hear. They're not, they don't seem to be pumping up the numbers. But it will be an interesting metric for us to monitor. So for the next earnings on the 21st of November, they expect to report 3 cents. And like I said, there is significant volatility implied in that move. Now, I think for the stock to reach that 30 to 45 level, it may take a while. We still have the peso depreciation headwind, and that's why I'm probably gonna just keep this on the watches for now, see how that evolves. But also, again, is a bit of a recent listing. You see how the 150-day SMA started to pop up only very recently. So it's hard to tell at the moment if investment bankers are bolstering the price just to keep the company afloat. And because of that, I'd like to give it a little bit more time. And last but not least, there's an absence of catalysts aside from earnings on this date. So that's basically 2 months from now. We can get exposure a little bit closer to the timeline of earnings. Onto the structure. The interesting thing about this company is that there is good liquidity, but there's not many expiries. So we got the expiry right after earnings, even though the day is not confirmed. And we can see that we can sell the 30s at 185. And then expiry is on the 21st of February. And we can go long that at 338. That's probably the structure that I'll be looking at here. First of all, we get a nice differential in volatility. The February's are at 44, whilst the November's at 46. We get a decent credit versus net spend. And then after the November expiry, we let that profit run through all the way into the 40. So that provides us with potentially more than 100% return before the expiry if it gets to 40, or a 300% return, assuming a $40 price target until the 21st of February. Hope you enjoyed the video. See you soon.